Welcome everyone to another edition of MHQ's Foundation Podcast 101, where today I'm happily joined with someone that doesn't sit in the UAE, but on the other side of the world, Matthew Sapovitz. Good morning, Matthew.
Good morning.
So,
nice to be here.
Evening for you, actually. So Matthew is a private client tax partner with MGO, and actually the one person we work with the closest with respect to compatibility of a foundation with US link. Because as we've seen since their introduction in 2018, foundation have become really the go-to structuring tool in the Middle East at large for any sorts of assets, whether for Muslims or non-Muslims. But in our practice, one client out of three has some sort of US link, be it a US founder, a US beneficiary, possibly a controller, and of course, US assets, whether it is shares in the listed company, custody of financial portfolios, or real estate. So what we are going to try to do today with Matthew is tackle some of the most topical questions around US tax planning using foundation. As you see, it can be made quite easy once you rely on professionals like MGO. So Matthew, thanks a lot for taking the time. So I'll jump right into it. US element, UAE foundations, are they compatible?
Yeah, definitely.
They are.
Yeah, there's a whole, so basically how US tax works is it works with all these various trusts and foundations and is able to look at their local law and tie it into various tax characteristics. So there's always some way to structure a foreign trust or foundation.
Okay, so there's a way of optimize, but one needs to be careful as usual. So I hear a lot about Grantor, non-Grantor trust-like regime, which I understand the same would apply to foundation. So can you perhaps, in layman terms, explain the difference between these two treatment or qualifications?
Yeah, so grantor trust is one where the founder is the tax owner, whereas with a non-grantor trust, the founder is not the tax owner. And the key difference there is with the founder as the tax owner, they're the ones who are actually subject to tax, versus with the non-grantor, it's actually at the trust level.
Okay, and we'll see in examples later on where the difference lies, and it's substantial. So my next question to you, and you touched on it on the founder. So can a U.S. national or resident be the founder of a UAE foundation, and is the foundation then automatically subject to U.S. tax?
Yes, a U.S. person can be a founder. In most cases, it becomes a grantor trust for income tax purposes. And so that's an important point. For state tax purposes, there's still some planning that can be done that can separate it out, essentially. Besides for the default treatment, though, there are particular cases where the U.S. founder is not treated as a particular grantor in this case.
Yeah. So what would be these cases? These are exceptions, right?
Yeah. And so some exceptions that come up, one is basically when the assets are transferred or sold at fair market value, and that's a key point. Another is a transference upon death. And then a third that often shows up is essentially where the trust or foundation does not allow U.S. beneficiaries. And so that's a key point, because if there's any ability for there to be a U.S. beneficiary, there's a presumption that the U.S. founder is a grantor.
Yep. So these are exceptions. One should be aware of them. Now, my question to you is, does this tax regime apply to a founder which then would plan on migrating to the US and becoming a US full-time resident?
Yes, and so some careful planning typically has to be done. And there's two particular anti-abuse rules that I'd like to bring up. One is that basically if a trust is set up within 5 years before the founder becomes a U.S. person, it can convert into a grantor trust. That's an important point. The other point is basically if an intermediary is used, And this is often the case where an intermediary is used and control is kept. It would be a grantor trust in that case as well.
Okay, so clearly something where pre-planning carefully and a proper advice is required. And I had the pleasure of working with your team on many files over the past 12 months. And it is actually not that complicated, but it is important to be very systematic in terms of facts and objectives, right?
Yeah, that's correct.
So let's turn to the beneficiary. So can a beneficiary of a foreign foundation, of a UAE foundation particularly, be a US national or resident? And if so, what are the tax implications?
So yes, a US person can be a beneficiary. There's a couple classifications based off of the type of trust for US tax purposes. We're talking about a grantor trust before with a US person. In that case, essentially it's the US person that's taxed. In another word, say a non-grantor trust, basically the US beneficiaries are taxed on the income portion of distributions. And if they're not distributed currently, it can be very expensive for those beneficiaries because you end up having high tax rates plus interest charges attached on. And then third scenario, which is rarer than the others, is where you have a foreign grantor. So basically a non-US person who's a grantor of the trust, and where it's set up with certain conditions so that the foreign grantor is treated as the tax owner of the trust.
Yeah. So let's actually jump to that, which is often what we are trying to achieve given acceptable circumstances, is this qualification of foreign grantor trust. So what are the conditions to qualify under this, and what are the advantages?
Yeah, so the main condition that's needed in order for a grantor trust set up by a foreign grantor to be respected as a foreign grantor trust is the fact that in most cases it needs to be revocable, where
Yep.
the foreign founder is able to actually revoke the assets, etc. A lot of times also there's certain other items in terms of independence, where
Yep.
we're looking at independence of, say, guardians, independence of the council members. And another aspect that comes up, which is in a different section of the US tax code, but is very important, is limitations on commercial activities, because the way the US tax code works, it's fluid between what's a trust and what's a business. And so the key thing is being able to keep to the characteristics of a true trust rather than commercial activities where it could look more like, say, a corporation of some sort.
Yeah, and it's a very valid point, and we see that with a lot of clients because they are, for example, very active in trading their own portfolios, etc. And always the question comes that, can I do everything with one foundation? And often, to be careful, like you mentioned, we love to have these underlying holding entities. Often with independent directors, just to make sure that we do not go over the line there in terms of tax qualification. So if that is followed, if the founder is a non-US national resident and more importantly doesn't have control, if there is independence, if there is no commercial activities deployed directly by the foundation, then actually it can be made super efficient. The distribution proceeds received by a US national can then not be subject to tax because the taxable person effectively is the foundation, respectively its founder based abroad. So that is super efficient, and that's the way to do it. Here you have it, the golden recipe. What are the tax implications if a foreign foundation now holds US assets, which is a scenario we see increasingly more, whether for portfolios, stocks, or real estate?
Yeah, so when a foreign foundation or trust holds US assets, they're still subject to US tax. And there's two types of income that can arise. One is US source income, the other is US effectively connected income. And it's important because of the fact that a lot of times in various trusts, foreign trusts, they don't think about the US element.
You touched earlier on the aspect of independence of control in the foreign grantor trust concept. Can a U.S. national or resident be a council member or a guardian of a foreign foundation at all? And if so, what are the tax implications?
It's possible, but it's not recommended because of the fact that it creates additional U.S. characterizations that can go contrary to the intended plan for the foundation or trust.
Okay, so typically, if a U.S. national would be a council member, then whatever is the compensation would be subject to tax, and it is far from ideal if that person is at the same time a beneficiary, right?
That's correct.
Yeah. So here you have it. This is not only Foundation 101, but it's US tax planning using Foundation 101, as we have tried to demonstrate with Matthew. By applying a systematic approach, a very factual, objective-based approach, it is possible, and actually surprisingly not that difficult to make a foreign-based foundation structure with US links, US tax compatible and friendly. One thing that we haven't discussed is the ongoing administrative obligations, and there are some on the beneficiaries. So declaration of being a passive beneficiary of a foreign-based foundation, but it's not very complicated either. One just needs to be made aware of what one needs to do and make sure that one complies, because Uncle Sam is quite nasty in terms of taxes otherwise, but it is doable. And who better than MGO and Matthew Sapovith to advise on that? Matthew, thank you very much for taking out of your time to enlighten us on this topic, and I look forward working with you on many other files going forward. Actually, here we have 2 more in the pipeline. And next week, we talked right here about ongoing obligation vis-a-vis US tax. We're going to talk with Kadzata Gatti about the ongoing obligation that a foundation has in the UAE, whether on an ad hoc basis, on an ongoing basis towards the regulators, etc. This is for next week. In the meantime, I wish everyone a good day. And Matthew, once again, thank you very much.
All right, thank you.